Welcome, everybody, to the end of the week. It's Friday, August 23rd. Scott Riley, the Market Update Desk, NMLS number 157524. We finally got the speech from Chairman Powell at the much anticipated Jackson Hole Fed Symposium. What did we learn from it? We learned that the time has come. The time has come for rate cuts and an easing on monetary policy. Let's talk about what was the crust of the speech and how that's going to affect us moving forward and what's on deck for more data. Chair Powell's speech was actually more dovish than the market had anticipated in many ways. Now, he did confirm that the September 18th rate cut is on its way. The direction of travel is clear, and the timing and pace of rate cuts will depend on incoming data and the evolving outlook and the balance of risks, were his specific quote. While he was non-committal on the size and the pace of the cuts, the market did like the confirmation that policy changes and it will begin a less restrictive stance. Powell did explain that inflation has declined significantly and has confidence that we've made significant progress on it, and it's on a path to 2% rate, of which they keep talking about. Their goal is for inflation. He also said that the upward risks to inflation have diminished, but the downside risks to unemployment have increased. Clearly, the Fed is more concerned, as it should be, on the labor market versus the inflation number. Now, this is actually finally being talked about, but they really needed to bring this statement out probably 5 months ago. In the labor market, Powell said that the conditions are less tight than they were pre-pandemic when inflation was below 2%, meaning the labor market would not be the source of inflation. On the Fed futures market, let's talk about what the market's talking about, factoring in on betting where the path is, where we'll be. They continue to price in a 100% chance of a 25 basis point or quarter point cut in September, with a 33% chance of a half a point cut. The market is putting a 73% chance of a full 1 point cut by the end of the year. This would mean there has to be somewhere, because there's 3 more meetings left, there has to be somewhere a 50 basis point or half point cut. It's either going to be September 18th, the day after election, or their December meeting. So somewhere in there would be where that half point is going to be. The market is also, in addition, putting in the expectation of 2025 being another 1.5 point deduction in the Fed funds rate. Now, that would be equal to a 2.25% reduction in the Fed funds rate from where we are now. That would put us next year at anywhere from 3 to 3.25 Fed funds rate. That would be fantastic, and the markets are really liking that. So we are seeing the 10-year bond and mortgage-backed securities move in a positive direction today. In fact, the 10-year bond is kind of back down to where we started out the week at 3.81. There's a significant, so we're at that resistance level, which is 381. If we can break through that, the next downside resistance level is 3.67. That would be fantastic for mortgage rates. Mortgage-backed securities are breaking through a very important topside barrier of 100.79. If we can get through that, actually the next level of resistance is about 101.25. Both those things are great news, and we have more data on deck next week that could get us to those points. New home sales came out today, and wow, was it a blistering report, especially compared to what the market expected. Signed contracts on new homes rose 10.6% to 739,000 annualized units, blowing away the estimates of a 1% rise. In addition to that, we had, of course, revisions. The June revision was also revised significantly upwards to have additional gain. So when you factor in the 10.6 and the revisions to June, sales rose the equivalent of 20% from the reported figures in June. Very, very strong report. The median home price also rose to 429,800, which was up 3.1% month over month. Now, this shows that people are signing contracts in July and that the demand is picking up as rates have moderated. We didn't even get to the lower rates that we had in early August in this report. So the likelihood of this acceleration in sales is going to continue. So these are great pieces of data for the market. What it means for people that haven't bought yet, you need to get in the market now. Take advantage of the great rates that we're getting, the downward trajectory in rates, because once more people realize where rates are, you're going to have more competition. More competition with limited inventory is going to put upward pressure on prices. Next week, this could continue our good news. We've got durable goods orders coming out Monday. Tuesday, we have appreciation numbers, Case-Shiller, FHFA, and also University of Michigan Consumer Confidence. Wednesday brings mortgage applications. Thursday is our standard jobless claims. In fact, it's going to be the second quarter GDP second look also. That's a very important day, and pending home sales. Friday, here's a very important one for us, personal consumption expenditure, PCE. It's the Fed's favorite measure of inflation. We're thinking we're going to have continued good news next week on the refinances for our clients that are out there waiting. Things can change extremely quick in a market. Take advantage of the rates when they get to those low points. Give us a call. We'll quickly move on those for you, get you locked in if you want to do that, get your refinance started. In the market, lots of things can change very quickly. And if you don't act fast, you might miss it, as Ferris Bueller would say. So we hope you find this interesting. We'll keep the information flowing to you as we get it. Look forward to helping everybody out. If you're looking at buying over the weekend, give us a call. We're on duty all weekend. We'll help get you pre-approved, get offer letters out to you, try to help get offers accepted. 616-293-2189 is our cell. We're looking forward to hearing from you. Do us a favor, like, share, and comment on our post if you could on all the socials, Facebook, Instagram, and YouTube, and it's going to be under the Market Update Desk. Have a great day, everybody.